There is an economic crisis coming, and it's bigger than tariffs, and it's bigger than inflation, according to the White House. It's a shrinking workforce in the United States because the American birth rate has been steadily declining since the great financial crisis back in 2007. At the same time, we have baby boomers that are leaving the workforce as they're getting older, and this is creating a problem, which is who's gonna fill all the jobs that we have if people are leaving the workforce at a very high rate, while less and less people are entering the workforce because less people are being born. And this is where the Trump administration is working to come up with a solution to incentivize people to get married and have kids. And according to the New York Times, there are 3 proposals. Here they are. Number 1, reallocate 30% of funds that the United States is putting towards a specific international fellowship to mothers or children. Option number 2, give a $5,000 quote baby bonus, a cash bonus to every American mother after delivery. And option number 3 is having a government-funded program to educate women on how they can have babies. Now I bring this up because 2 out of the 3 are financial. And if this is going to continue to be a concern that the White House works on, it can also create an investment opportunity for you. See, my goal for you is to think like an investor, not get caught up in all the emotional and arguments that are going on in the world. For example, as people get older, they're going to need specific services. They're going to need more healthcare services. They're going to need more nursing homes. And there are stocks that specialize in providing those services to elder people. And if you don't want to find the perfect stock, there are also ETFs out there that specialize in those things. Now, you got to remember, I'm just a random guy on YouTube. Investing has risks. I can't tell you what to invest in, and you will lose money at some point, so make sure you never blindly trust a random guy on YouTube. But as an example, there's an ETF out there called AGNG, Aging, that specializes in companies that profit as people get older. And if the United States government is going to be investing in having people have more babies, well, there are stocks that specialize in fertility. There are stocks that specialize in selling products for newborns and babies. And if there's more babies out there, well, those companies could also be primed to benefit. This is why I want you to start thinking like an investor, because what Wall Street does, they ask one question. Anytime there's a change happening in the economy or politics, it's where is the money moving? The average person gets angry. They have some sort of emotional response. I want you to figure out where is the money moving. That way you can profit the same way Wall Street does. Now you can hate it or love it. Wall Street is going to profit regardless of what your emotional reaction is. And so my thought is, why as well have you learn how it works, that way you can profit as well. Now let's dig into some of the numbers, that way you can understand what's going on. I also want to talk about what's going on with auto tariffs and why some CEOs say that there might be a recession coming. But this is where I also want to remind you that my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, the stock market, the housing market, crypto, and the global economy into a fun, witty, and easy to read newsletter. It's completely free. We have hundreds of thousands of investors that are reading Market Briefs every morning. Plus, when you join Market Briefs, you'll also get my investing masterclass free as an added bonus just for joining Market Briefs. So if you want to get Market Briefs, my free financial newsletter, plus my investing masterclass, all you have to do is click the link down in the description below. So we talked about how raising a child is expensive, having a baby is expensive, and 2 out of the 3 proposals by the Trump administration to incentivize people to have kids focus on the financial side of things. Well, let's dig a little bit deeper, because the cost to have a baby in America, according to the data, averages $18,865, and the average out-of-pocket cost after health insurance is a little bit under $3,000. So it's expensive to have a baby, but it's also very expensive to raise that baby, because the average cost to raise a child in the United States from birth to age 18 is in a range of $202,000 to $430,000. So you're looking at multi-6 figures to raise a child in America, which is why many people might be avoiding having kids, because life is already expensive because of inflation. because of the job market, because of everything that's been going on. Now, on the topic of tariffs, because tariffs have clearly been a hot topic on the news for months now, there was just a big development that happened with tariffs because the Trump administration is now easing up just a little bit when it comes to auto tariffs. And here's what's going on. There's still going to be a 25% tariff on imported vehicles and on those parts that come into the United States. But those tariffs are not going to be stacked on top of other tariffs. So for example, let's assume that you're importing some steel parts for your car. You'll still have to pay that 25% auto tariff, but you won't have to pay the additional steel tariff as well. That's what's been going on. And so now that gave a little bit of breathing room to some auto companies because they don't have to worry about the stacked tariffs, but the auto tariffs are still there. We'll ultimately see what happens. A lot of foreign car companies are concerned that this is going to hurt sales because they're going to have to charge more money for their cars. But we'll see what happens, especially in the first week of July, because the first week of July is when we're going to hear the updated tariffs on countries from around the world. And we'll see where the tariffs go, how many tariffs are removed completely, and how many tariffs are reduced. A lot of investors on Wall Street are hoping that tariffs around the world are going to be reduced, if not removed. But we'll ultimately see what happens the first week of July. Everything between now and then is just speculation. It's people guessing as to what might be happening. So wait until the first week of July. Again, we'll be keeping you posted here on this channel and of course in market briefs. And then we have concerns about the economy slowing down. We have concerns about a potential recession. Where do we hear this from now? Fortune magazine published this. CEOs are worried about tariffs and economic uncertainty. So much so that 62% of CEOs are predicting a recession or slowdown coming in the United States. Why are CEOs predicting a recession in the United States? Partially because of inflation, which is still lingering, partially because of tariffs and everything else that's going on. Again, tariffs are a tax, and it's a tax paid for by the importer. So if you're a business and you're importing products from, say, China, and now you have to pay a tariff, that makes the products from China 25, 50, 75% more expensive depending on what the tariff is. And now if you have to eat up your profit margins, it means you make less money. And if you have to raise the prices of your products, it means you'll probably sell less stuff. And this is the concern that a lot of businesses have, essentially that they're going to be selling less stuff because of the tariffs until they bring the manufacturing into the United States if they decide to do so. And this is that temporary concern that a lot of people have, that these tariffs could cause businesses to A, sell less stuff, or B, make smaller profits, which could ultimately lead to an economic slowdown or a recession. Now, the reality is we don't know what's going to happen. Everybody's got a couple financial opinions. They're kind of like armpits. Some stink more than others. But my goal is not to try to predict what's going to happen because I have no idea what's going to happen. There's been a lot of uncertainty. There's been a lot of confusion around tariffs. My goal is to find the opportunity. Now, in the beginning of this video, I talked about what's going on with the United States government trying to increase how many people have babies, which is not a normal topic for this channel, but I want to talk about it from the financial side. But regardless of people having babies or not, there are still opportunities for those of you who don't want to spend the time and effort and energy that are finding these specific shifts or changes that are happening in the economy. Because there are ways for you to just invest in the American economy. There are funds out there that will give you exposure to the total stock market. There are funds that will give you exposure to the S&P 500, which is a group of the 500 largest companies in the stock market. So for example, VTI. VTI is an ETF that gives you exposure to the total stock market. Again, these are just examples. I'm not telling you what to actually invest in. VTI gives you exposure to the total stock market. SPY or VOO, these are two ETFs, SPY and VOO, give you exposure to the S&P 500. As a disclaimer, I'm personally invested in the S&P 500 through VOO, but this gives you exposure to the 500 largest companies in the stock market. Now, when you invest in any one of these ETFs, you're essentially investing your money into the American economy. And now, there's a couple things that you can do. You can follow a strategy like ABB, always be buying, and now every week or every 2 weeks or every month, you have an automatic cadence that's just pulling money out of your checking account and it's investing your money into these funds, and then you let the markets do their thing. Markets go up, markets go down. You don't really worry about all the volatility. You just let the system do its thing. You just keep investing your money through the ups and the downs. If you want to be a little bit more involved, you want to be a little bit more sophisticated, well, now what you want to look for is where is the money moving? And now you're looking for more of shifts, changes in the economy, changes in government spending, changes in consumer habits, changes in Wall Street habits, changes in innovation. This is where now you can look for a shift that can create a long-term investment opportunity. Again, it's not trying to be a trader, it's trying to be a long-term investor capitalizing on where the money is moving. And the way you study this is about paying attention to changes that are happening. It might be changes in government policy. It might be changes in how the way people are spending money. It might be changes in patents and innovations that are happening with tech companies or healthcare companies or whatever type of companies. It might be changes in the way the Wall Street banks are spending and investing their money. It's all about paying attention to the data. Yeah, I know it's a lot of work, but this can also create more opportunity, more risk for more potential return. This is where also my team at Briefs Media has a product called Briefs Pro, where we publish this type of more advanced financial research, if that's something that you're interested in. But the whole idea here is paying attention to the shifts, paying attention to where the money is moving, and then just finding the right game for you. If you don't want to worry about getting into the nitty and gritty, that's fine. Just invest your money into the American economy. If you want to find more unique opportunities, great. Now you can start doing more research into paying attention to where the money is moving. That's how you can build wealth, because you build wealth not by getting emotional, getting angry and complaining about everything. You build wealth by finding opportunity and then putting your money to work as a long-term investor. Of course, investing has risks, but hopefully my channel here and Market Briefs can help you, number one, understand what's happening, stay calm through the craziness, and find the opportunities as a long-term investor. And with that, I will see you on YouTube tomorrow.